Hello everyone, and welcome back to this week's Sunday video scan with your host, Stan. I hope you guys have had a great weekend and week thus far. We're doing things a little bit different today as Chris is out doing Chris things, so I've had the pleasure to sit down with you and go over some of this market price action. Just a quick note, I'm not as in tune with the broad market mechanics as Chris is, so my macro comments may be limited. However, not to worry, Chris will be back next weekend, and he also passed on several items that I can share with you today. I have a similar format for this week's video. We'll go over some of this past week's price action. We'll see what's working in this market, what's not working. Maybe go over some chart examples, and then we can get right into the main watches for next week. So a little recap of last week. We started the week with all of these Black Monday, doomsday callings, predictions, etc. And per normal, we didn't really get any of that. Something that Chris wanted me to mention here was the market essentially continues to operate in high volatility mode. We saw an incredible squeeze on Wednesday, which then was followed up by a gap down and continued selling pressure on Thursday. The headline and tariff news, especially between the U.S. and China, continue to drive this market's volatility daily. You can have a full swipe recovery like we saw on Wednesday, just in a matter of a few minutes, to where you recover the entire day and go to fresh highs. So this is the type of environment where you can get this sparse liquidity, right? So you have this sudden flow of demand combined with that liquidity pocket, and then forces the price aggressively one way. So let's say you have something that swipes up, that's gonna clear out that entire bear positioning, so it forces that one side one way, and once that's done, once that clear out is done, maybe during anyone sitting on the sidelines waiting to get in, maybe they get in as well. But once that wave of demand is done, that clear out, then the price quickly reverts back, and it generally reverts back with similar velocity as the market loves symmetry. As something goes higher in a certain velocity, once it fails, it generally resembles that velocity, and we saw that exemplified last week in the overall market. Look around Wednesday or Thursday or so, when we had that big clear out on Wednesday, big squeeze, and then it completely or it gapped down, and we had that selling pressure on Thursday. Another crack is seen in the credit market, which is showing up as rising bond yields, and that further contributes to the existing volatility in the overall market, which again we've noticed over the past several sessions. We can look at some charts like SPY, NVDA, PLTR, SMCI. All are experiencing volatility across the board, which brings me to the next topic of discussion, which is what's working in this market and what's not. So for me, the number one thing that's working in this market is sizing down, and sizing down due to volatility, and essentially that increases increases the difficulty in which I manage my risk. So when we're in a high volatile market, a lot can happen at any given moment, at a turn of a dime, as they say, or you see the next headline come in and the price completely reverts. So that I have no control over. And the only way that I can control that exposure is by limiting my size. So every time we're in such an environment, whether it would be, say, end of the year, a couple of weeks, or during big events such as election times or something like this, where it's a high volatility market, my approach is generally to size down, because my ability to control risk effectively is limited due to the volatility. The other thing that's currently working in this market is essentially only reacting to aggressive moves, to big moves that go into some sort of a higher time frame liquidity zone. So if we look at, for instance, NVDA, if we put it on a, say, 15-minute chart, you can clearly see how this 110 and 111's area is essentially acting as supply over the last couple of weeks at least. Every time we go up above 110 or 111, etc., clear out, come back, it rechecks in right over here, and then from there it had that aggressive unwind, which we saw at the beginning of last week, or I'm sorry, towards the end of last week, we had this aggressive unwind, and then this is the beginning of this week where it started to stabilize. You have this essentially Wednesday recovery, and again it swiped right through 110, 111. So it went up to, I think, 115s, 114s or so. And then from there, it failed. But you can see how this 110, 111s, essentially on a higher time frame, has been acting as that supply level for NVIDIA over the last couple of weeks. So that's what I'm interested in trading. If this, just like we see here, if we get an aggressive move higher into this range, into this 110, 111, you can see how it pops into here, clears out, it distributes for a few minutes, and then it fails to follow through. You have a similar pop over it, it comes back and it fails, and then again, it's slowly started floating towards that same level towards end of day on Friday. But ultimately, my interest in a high volatility market is not to be involved in the indecision phases, not to be involved in the places where there isn't much liquidity, especially on a higher time frame. And not to be involved, it doesn't mean that you can't have a starter, you can't start a little bit, nibble here and there, but not in any way to sink teeth into the position or anything like that. And something else that's really helping me in this market is also our AI tools within Investors on the Ground, because given that the market is currently driven by headlines, being first to those headlines, having access to them first, truly provides that extra edge, that extra opportunity where you're able to react to that event very quickly. So the Investors on the Ground's IU or the AI tools have been extremely helpful in this market environment. A couple of things that I would say for the other side, right? Things that maybe are not something that is not working for me would be to force an idea. So for me would be if I came with a certain idea into the market from the day before and I see that has shifted, I cannot force that idea on the existing price action, because given that we're in a high volatility mode, anything can happen overnight. Anything can happen within the next 10 to 15, 30 minutes. So for me to fully have belief and be stuck to one idea, it is something that I'm very careful of. I don't mind trading. It doesn't mean that I can't stick to one idea from the beginning, but in this market, I want to be proven right. I want to have that extra confirmation. I don't necessarily want to be first. What I do want, though, is that extra confirmation that now is a more appropriate time for the risk exposure. So these are just several ways that I am managing the existing market environment. Another aspect to kind of watch out for is in this market where you have a lot of the attention focused on the larger cap names, mid to large, etc. If you are dabbling on the small cap side, especially on the long side, it's something to be aware of, because when it comes to small caps, they don't necessarily operate under the same fundamental rules, right? You don't. When it comes to small caps, you raise when you can, not when you want to. So just because something has gapped up 2, 3, 400%, or something has gapped up 20%, and maybe you had a runner that went 5, 3, 4, 5, 600% the day before, it's just be very cautious in trying to chase that next small cap squeezer, because it could turn into a disaster. They could do an offering at any time. You have certain rules that have recently come into play, such as how often and when companies can do an RS, etc., or reverse split. So all of that has an impact into the market mechanics. And when we are in an environment that is already at a fundamental level volatile, things will be different. Things will be extra. Something will run more. It's going to gap up a little bit extra. Something will fail more. It's going to go down a little bit further. So all of that, even though you can't predict when it's going to happen, there are times where you can put a probability and say, this time, the probability for such behavior is just higher. And that's really my message here, is just recognizing when that shifts. I think a trader's aimed superpower should be adaptability. As the faster you're able to adapt, the faster you will be able to react and be there before everyone else. So these are just some of the ways that I have been managing the existing market. We've seen really decent moves as far as some of the large caps, and we'll get into them in a second when we do the main watches. But ultimately, the message, I think, behind the first portion of the video scan is it is a volatile market. It's not an easy market, but there are certain things that are within your control. And while it may seem difficult at this time, when you look back at it in 6 to 12 months, you'll realize what a great opportunity it was to simply be exposed to the market price action. Even if you don't trade every day, even if you don't trade every ticker, just simply being in front of the screens during such market environment is important, as they don't happen very often, right? You cannot build that data set quickly because such environments, right? It's not your normal day. So anyways, before we get into the main watches for the week, I just wanted to mention that I'm not a financial advisor. These are not buy or sell recommendations. This video is for informational and educational purposes only. And if you're okay with that, great. We can move on. If you're not, you can switch off to a different video. That's fine as well. But anyways, with that, we can get right into it. So I have NVDA here on the screen, and we'll go over it as far as the first name on watch. However, when I'm talking about NVIDIA, I'm essentially talking about that market basket. So NVIDIA, you can talk about, I can include their PLTR, Tesla, SMCI, etc. Yes, the intraday charts, they look a little bit different. They have their different breakdowns in different points of time. However, the overall sentiment, the way they move throughout the day is generally the same as you watch SPY and other areas. So when it comes to the market related names, I like to trade something like NVDA, PLTR, Tesla, etc. But here you can also, if you want some exposure, you can trade names like SOXL on the long side, SOXS on the short side. This is your semis. You can do something like SQQ and get into some of the overall tech exposure. So there are several ETFs and instruments out there that you may use to get exposure, in a broad sense versus any one given name. But I don't mind trading, NVIDIA, POTR, SMCI, Tesla, etc. in tandem, because I'm not necessarily worried about liquidity or any localized risk exposure. More so, that's how I manage the risk, right? I sprinkle it across several names versus focus on one, as I'm not sure at any given time which one of these 3-4 in the basket will react better or worse to any given particular headline. So NVIDIA, first name on watch. Ideally, again, I'm looking for similar moves, similar opportunities like we've seen over the last several sessions on a higher time frame. I mean, this does not necessarily look very, very great. You can kind of see this overall. You can put a little trend line here or however you want to. I don't necessarily use trend lines. I put them on my chart somewhere just to see the overall direction. But for me, what's more important is to again just know the way, know the path that it's going, not to be exact. As I don't use trend lines for triggers. But I do like to view the overall direction. So we're coming up right on this overall downward trend line. So next week, a couple of possibilities. We could gap up 112, 113s and go. But as we've established, this 110, 111s area has been key. So on Monday, if we gap up, like I said, 112, 113s, and then it fails, and then it fails to follow through into this 110, 111s area, then I'm interested for a potential, unwind. However, if we firm up on this 110, 111, 112, then it's a clear sign that they're defending the level, and it's not something that I'm willing to step in front of. So again, what I'm interested in, I like to look at the higher time frame chart, see where those higher time frame liquidity areas are, and then make a decision based off that, make an entry based off that. I'm not interested in participating in this, in between type of stuff. So that's NVIDIA. Similar again, POTR. I'll just quickly go through it just to mention some key levels. POTR, you can kind of see same thing. Put it on a higher time frame. You can see this 89, 90s. Behaving as supply so far. Yes, we cleared it out on Wednesday, but we cleared everything out on Wednesday of last week. So here we are digesting this move between this 85-90 area, but I'm mainly focused on this 89-90. So if on Monday something similar like NVIDIA, if we gap up into this 90s and then maybe clear out, do like a candle like this or something above 90, 95, 90 and a half or so, 90, 80s, and then it fails to follow through, then that's something that I'm interested in following up with. However, if we gap up and firm, then again, nothing to step in front of. And then also if we, similar with NVIDIA and POTR here, is if we open flush, maybe somewhere into the 87s or 86s, then I might be looking for a quick scalp on the long side. But ultimately, those have been the type of trades on some of these larger cap names. They've been more so shorter time frame, right? They've been more so scalps versus any big picture all day unwind or anything like that. So this is NVIDIA and POTR as far as the large caps. I'll also keep Tesla, unwatch, Amazon, etc. More so, given that we're in a high volatility environment, I can prepare as many plans as I can today, but then come Monday morning, that could all change within a headline. So this is a moment as well. As you reflect on the way you review information, it's a moment to also ensure that you're spending your time properly. So Amazon, NVIDIA, POTR, Tesla, some of the larger cap names. The next one that I have on watch is this PRTG. Nice clear out here on Friday into this previous area, and if we go back on a little bit of a higher time frame, you can kind of see where this level became important. These two lines were already on my chart from these couple of days. But nice little move there. Friday clears out into this 1280 13s area, looking left from end of March, and then it immediately fails to follow through. So for me, ideally, on Monday, I would like to see some sort of a ideally gaps up maybe 950 10, and then it pushes higher into this congestion zone here between 11 and 12s, and then fails to follow through. Just the way it closed on Friday and this after hours action, I mean, hopefully it doesn't gap down, but the ideal trade is a gap up exhaust into this 11 12s and then fail to follow through. If it does gap down, I'm still interested in it. This daily has plenty of room left one way or another. So if we gap down, I won't be afraid to chase some of that name, as long as, again, I'm proven right. So I'm not going to chase a gap down immediately, but if we gap down and then try to push maybe red to green into close, try to push maybe red to green into open or out of the gate, even though it may have gapped down a little bit, I don't mind participating in that as well. So ideally, higher the better for the unwind, but if it does not, then we can react to that as well. The next one that I have on watch is MSPR. MSPR, just typical small cap chart that we've seen throughout the days, throughout the years. Nice positioning day. Day one fade there on Friday. So for me, what I'm looking for is some sort of a gap up, maybe into VWAP, this 3 level, and then right over here, this 290s to say 350s. It's a little bit of a wide channel, but again, given the market environment, I don't mind having a little bit more of an imagination and looking for what's the ideal scenario and then adjusting from that point forward. So ideally we gap up 290s, 3s, then on open, shove into 320s, 330s, 340s, clear out this area, this congestion area, and then look to scale from there. As you can see, we gapped up on I believe this was Thursday after hours, and then it kind of held this pre-morning on Friday, and then it failed out of the gate, right? It failed off the 3s, but then it held relatively well throughout the day. It just went sideways. It didn't necessarily do a full round trip. So I'm not overly bearish on this name by any means. I am recognizing the way it held, but again, if we ideally we gap up, shove into this 350s, 330s, 350s, and then if it fails to follow through, then I'm interested in joining the trade. The next one that I have on watch is this VVPR, and VVPR, I'm mainly stalking it right now. I'm just kind of watching it, every day. I've been watching it for the past 2-3 days at least, or 3-4 days since about this day or so. So I've been watching it throughout last week, but what I'm waiting for is a day like we had on April 2nd, some sort of a clear out day of this backside unwind. So as you know, this is a pretty big chart. I mean, this thing came from sub $1, went up to almost 7. So as we are going through the overall process of this, of these small caps, what I'm looking for is, or waiting for, is that day that it does that clear out. Now, whether it gaps up a couple of cents, 10, 15, 20 cents, and then it just runs higher. But essentially, I'm looking for a similar candle like this one in early April, and for it to, pretty much clear out some of this congestion area that we've had on the backside. So maybe, if this thing gaps up at some point, a few 10, 20, 30 cents, and then we clear out this 4s or clear out this 450s, and then it fails to follow through, I would be looking for a trade. So that's VVPR. And the next one that I haven't watched is MLGO. And MLGO, this is such a familiar name, I think, for pretty much everyone. It's a repeat offender. We've seen this name many times. So a couple of things I wanted to mention on this MLGO. I had a trade on it, I believe, on Friday, and maybe we can put up the chart there, but it pretty much started in around this level, re-added a little bit, and then once it exhausted 15, 16's level, and it failed to follow through on VWAP, we had a nice unwind, and then it tried to push back towards VWAP. It actually failed. I believe I re-added here, or added more to the position. The plan for this on Friday was an all-day fade, and I believe I added some right around this 14-15's level here, and then ended up covering towards end of day. I covered in a couple of spots, mainly because while I liked the all-day fade this had on Friday, what I did not like was the fact that this was the only clear-out attempt. Right, there wasn't another clear out attempt, so that sort of had me a little bit uneasy in terms of just continuing to add to the position without any de-risking throughout the overall trade management. But anyways, the point was, that's why I started covering shortly after 3 o'clock, right around this level somewhere, because I did not want to be the last one to realize, if this thing ramps into close the last 10-15 minutes, I don't want this thing to essentially be the last one to realize that and then end up stopping out on VWAP or something. So MLGO will continue to stay on watch, mainly because I like this overall daily chart. I know a lot of people are waiting for this liquidation day, because that is kind of what MLGO does, right? It has a massive history of liquidation. We've seen this, play out many times. But I think, this might be a scenario where enough market was created to where maybe it's not going to liquidate minus 80, 90% in one day. It's possible that it just does its whole little backside thing, kind of like something like RGTI, when RGTI does its whole backside dance, or you have SOUN, or just your typical mid-range longer type of moves. So obviously, structurally, the chart on MLGO may look similar to the likes of RGTI and SOUN on a daily level. However, structurally, as far as share structure, I'm much more fearful of something like MLGO versus RGTI. MLGO is not a name that I would necessarily swing with high conviction. So as far as on Monday, what I'm looking for is more of the same, right? More of any sort of pop that fails to follow through. I'm looking to be there for further unwind. Ideally, down to single digits next week or so, that would be ideal. But again, I would like to take it one trade at a time, one day at a time, and then see what it proves. But again, what I'm looking for is any sort of ramps into previous key levels, and then for that to fail to follow through. So if we look at some of the key levels from before, you see this 1550s to 17s channel. It defended it over here. It had this little excitement move there into the low 20s, and then it essentially got stuck after this fail. It got stuck for about towards the end of the day of Thursday and then the morning of Friday. But then once that 15.5s failed, overall the chart has failed to follow through, even on a higher time frame. And then I've had this trend line here, pretty much tracking the beginning of the move, and it's such a clean fail off this trend line, and then it unwound the entire day on Thursday. So that's what we'll be looking for next week on MLGO, more of this type of price action where it opens, maybe it runs 9:30 to 10 a.m., 10:30 or so. It runs whatever, however many per share, and then it fails to follow through. That's kind of what I will be looking for. And the last name that I have on watch is VSA, and VSA, that's more so a long side watch. Just looking for the day that they finally let it trigger this 50 cents to 60 cents level. Like this, if it's been rejecting in this 50 to 60 cents over the last several weeks, you can kind of see how it's just rejecting this range. But what I'm waiting for is the day that it actually catches, and then we'll look to trade this accordingly. And with that, that completes the Sunday video scan portion. Again, thank you guys for watching and joining me today. Chris will be back next weekend, and also I believe in a couple of weeks we have the Traders for a Cause in San Mateo Bay Area meetup with Brian Lee, Anthony Nieto, Zach, and many more traders. Such a great opportunity to meet and talk shop with other like-minded individuals, expand your network, etc. So that is all from me today. Please let me know if you have any questions in the comment section below, and I will see you in the room. Have a great day.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.